Welcome investors to the 40 Finance channel. My name's Jeff Beers. Going to do a slightly different format today, getting kind of a brainstorm mindset for Q4 and the holiday shopping season. Start thinking about, in this new world that we're in, what kind of stocks are going to perform well Q4 this year. We've obviously had significant lifestyle changes across all of our lives this year. So let's take that perspective and roll it into the stock market for Q4 with holiday shopping. Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you research and do your own due diligence before buying any stock. And if you like stock market analysis and personal finance videos, then make sure you subscribe to the 40 Finance channel. I post here 3 or 4 times every single week, so make sure you sign up to get the notifications. And finally, if you're interested in joining my email list, sign up link below. You get a free copy of my 15-minute stock analysis report as soon as you sign up. Check the description for more information. All right, so what we want to do in this one is start thinking about how the world has changed and what that might mean for our first holiday season within these changes. And we want to look for potential profit opportunities, short-term profit opportunities that will start to gain momentum as we get closer to the holidays. Now, as a caveat for me, as always, I'm looking long-term, but what we really want to do is get good quality stocks that could see a bump in Q4, but be just as good to hold on to for the long term. So here's some quick criteria and the bullet points. We want fast 10% returns with larger long-term upside. This is less about fundamentals and more about psychology. Just assume I've done some of the fundamentals for you behind the scenes. All the names here have room to run, in my opinion. I will call out a couple in here that are really hot right now and trading at all-time highs. But most of the names in here, I think, have an easy 10% upside by the time Q4 earnings gets reported, you know, give or take February 1st. All right, the first category that we want to think about for Q4 is video games. 2020 is a very unique year for video games for a couple of different reasons. The first one is obviously the sort of stay-at-home philosophy, which has accelerated the use of video games, as well as diverted budget spending, maybe from things like concert tickets or other entertainment, and drawn it into video games. And then we also have the fact that here in just a few weeks, we're going to be launching 2 new game consoles, Microsoft's Xbox and Sony's PlayStation. Now, it looks like more than likely these game consoles are going to sell out in a flash, and not everyone's going to be lucky enough to get one. But anytime you have that sort of momentum coming in, you can assume that somebody's making money off of it. And it's going to parlay over into computer gaming too. So while Xbox and PlayStation are kind of getting all the attention in gaming right now, computer gaming is just as hot. And what I could kind of envision here in the holiday season is a lot more people taking their Christmas money that they get, building new computers, gaming computers. They're very technical. A lot of people like to build it themselves. So I can see a lot of money being diverted into that place, as well as just straight up gifts of laptops and PCs designed for younger gamers. And if you're thinking about video game stocks, don't blow off phone game developers as well. App gaming is going to be just as big. So when you start to talk about the Zyngas of the world and people in that category, more likely than not, folks are going to be sitting on their butt, on their couch, and there's plenty of people out there who enjoy playing games on their phone. All right, so in gaming, here's my names to consider. I got Electronic Arts, AMD, Activision, Blizzard, and Sony. Now, like I said, 3 out of the 4 of these I think have an easy 10% to run. The X factor there is AMD, and you see it has a couple stars next to its name. It's not that AMD isn't going to make just an unbelievable amount of money here in Q4, but I do worry just a little bit that that stock is running so hot. So I put some asterisks there. It doesn't mean it's a bad buy. And if you're going to hold on for the long term, then just ignore the fact that it's running a lot of hot right now. If you're holding long, then just buy in, close your eyes, and I think 3 years from now, you're easily a happy camper. All right, the next category is home and mortgages. So obviously we talked a ton about work from home this year and the Zooms and Slacks and all those things. But the other side of the home category that I feel is really going to get a beat to it is just living at home and everything about the home. Don't forget that while we don't have a lockdown, we are going to have colder temperatures, potential weather, things like that. Anything that's revolving around that home ecosystem in Q4 has a chance to break out. And the mortgage part of that is because I really do see refinances being a big part of Q4. Again, interest rates are low. Some folks are going to run into a Q4 where refinancing is going to keep their boat alive, so to speak, if we have any more unemployment numbers, etc. And then you're going to have folks that are going to refinance and try to fix up some stuff because they're probably going to have, small family parties. So I think refinancing a mortgage is an outside play that you wouldn't think of typically during this time of year, but is very prevalent for this particular year. All right, here's my names to consider in this space. Anti-Home Services, they run websites like Home Advisor, places to get contractor referrals, etc. That one is under $20, and quite honestly, I might be picking it up myself here soon. Rocket companies, you guys know, I'm a big fan of Rocket. That's where the refinance comes into play. A lot of folks have been asking me because Rocket went to, $20 to $35. Now it's back down to $22. And people are asking me, is that one dead? No, it's not dead. We still have 0% interest rates for 18 to 24 months. Home Depot, that one gets an asterisk only because it's running hot right now. Long-term Home Depot is a solid gain. Just not sure if you'll get that 10% before February 1st. Wayfair, wouldn't surprise me to see them explode even more, and they've already exploded. But when you talk about holidays and decorating, I could see that one take off. And then Netflix, I did a video this week on FANG stocks being overvalued, and the one on there that was probably the least overvalued was Netflix. Picture this world too with Netflix where a lot of people have canceled their subscription because it was summertime and they were saving money, and now we're huddling all together, staying out of the snow. It's time to turn those subscriptions back on. All right, the next category is the digital payment category. And while this one works just about every day of the year, we know that holiday shopping, it's going to be turned on in overdrive. And frankly, this is a segment, while it has went up in this market, I'm still surprised at how slow some of the payment stocks have kind of eked up. In the background of a stock market that's just been on fire, they've done well, but they've all sort of identified problems along the way, which has kept them from explosive growth. That explosive growth might come here in Q4. So obviously with digital payments, we're banking on accelerated e-com spending. I think that one's in the bag. Nobody wants to go to a store in the middle of a flu outbreak or a COVID outbreak. So e-com's in the bag, that one's done. Let's think about, though, spending category changes, right? So instead of airlines, we might have more gas station spending, right? Instead of restaurants, we might have more food delivery. Things like that you're probably already aware of from, the earlier days of the pandemic, but they're all going to get accelerated again as we go into the colder months. And listen, Christmas isn't getting canceled. All right, the holidays aren't getting canceled. People are going to do what they're going to do. And I think all we're going to see is that instead of $1 spent on a plane ticket and a restaurant, that money's going to circle over to, perhaps rental cars, gas stations, and restaurants that have takeout and pickup, like a Maggiano's or a Cheesecake Factory. All right, my names in this category, absolutely for sure. PayPal number one. I think if you're not in on this category yet, I recommend you start with PayPal. I think long-term Visa and MasterCard, I probably favor over PayPal. But in 2020, heading into Q4, I love where PayPal's going. I like the Venmo. I like the fact that e-com is hot. They're under 195 right now, and I feel really good that they're over 200 into the 220s. Yeah, pretty close to February, somewhere in there after Q4 earnings report. Visa and MasterCard, hey, these two names, I'm not going to say they're beaten down because they're not. But they got dinged really hard on travel spending. This is their time to shine. And you could make the argument on these guys that you're buying low, so to speak. And, you know, I think for all intents and purposes, we hope that by April, May of next year, that we're in an afterthought on this pandemic and all the spending categories resume. Certainly travel will be the first to come back up, and that's where Visa and MasterCard make buku dollars. All right, so our last major Q4 category, hey, we know people are going to go shopping, right? And we know about e-com and the benefits that a lot of retailers have seen in that area. But now when we're looking ahead to the holidays, we want to think a little bit more about who's winning sort of the omni-channel, right? Retailers have been talking about the importance of omni-channel for 6 or 7 years, and yet still very few of them do it well. But the ones that can offer a little bit of everything, right? The ones that can offer gifts and food and delivery and pickup and in-store, this is where you're going to see the hub of holiday activity. I think people are going to be a lot more cognizant about not going to 700 places, right? I think Corona fears will actually change some of the times that people shop. So I can see, folks going in at 8 p.m. To do all their shopping, or 6 a.m. or something like that, and avoid the crowds. Who can give you everything at once? That is a theme that I think is going to be very big here in Q4. All right, let's take a look at some names to consider. Target, Walmart, Kroger, Best Buy, Dick's Sporting Goods. Those last two are obviously more of specialty retailers. But at the top, Target, I love the play on this. I really probably need to buy into Target. It's just running really hot right now. I'm not sure that one gets plus 10% by Feb 1. However, it's a great long-term play. And if you see a dip on Target, let's just say it's a market dip or Q3 earnings come out and they miss something, I would definitely consider picking it up because the upside over the next 6 months, in my opinion, is huge. Walmart has a ton of stuff going for it coming down the line. If you've seen any of their investments in e-commerce and how they're getting packages to and from the store for pickup, it's going to be big. We'll see if America jumps in, but do some research. Buying Walmart in 2020 for what will undoubtedly be a good Q4 for them could also pay off handsomely if you're willing to hold it for 3 to 5 years. They are putting their money where their mouth is. They're coming out on this e-commerce omni-channel thing, and they've got the money to make some waves. Kroger, I'm not sure how many people have Kroger. I have Kroger here in Cincinnati. You want to talk about fantastic options for grocery delivery, grocery pickup, obviously the in-store, which is going to come into play for holiday meals and stuff. I like what Kroger's doing. If you have one near you, consider investing in it. It's not a very expensive stock, and I think they're going places. Best Buy and Dick's, again, we're in specialty here, right? This is where you have to stare at it and ask yourself, do you see it? I could see some people in my life who would only buy their Apple computer at Best Buy because they want to talk to a person, they want to see a person, right? They don't want Amazon to drop it off at the doorstep. So think about that sentiment. It could be big for Best Buy this year. They also have that added luxury of buy it online, pick it up today that Amazon can't duplicate. Listen, some people want to pay for something and go get it. Okay, so that they're holding the box and they know their Christmas shopping's done. Dick's Sporting Goods, very much the same way as Best Buy. Obviously, you're just talking about sporting equipment, but sports at home, training at home, obviously huge when you start thinking about treadmills and weights and basketball hoops and everything else. I could see the DICS will actually have a better year this year than 2019 because they've really expanded their omni-channel approach as well. All right, guys, those are my 4 categories to think about when you go into Q4 and you're trying to buy some stocks. Hey, the market is hot right now. It's really hard to uncover value names for the short term. I feel good though that the names I gave you today have a legitimate shot at over 10% returns for you before Feb 1, and every single one of them is worthy of a long-term hold. Let me know which stocks you're thinking of for Q4 to try to parlay some quick ROI as we head into 2021. And don't forget to subscribe and give this video a like if you enjoyed it, and sign up for the email list for the 15-minute stock analysis guide. Really appreciate it, guys. We'll see you on the next video.